market reaction to Donald Trump's victory in the US presidential election is ongoing for a second week. The dollar is stronger across the board, and Bitcoin had surged toward $90,000 at one point this week, but it's dropping back from this key level. Typically, financial markets and risk sentiment rises in the month after a presidential election. The same happened in 2020 after Joe Biden's win. But after US stocks had their best week in a year last week, there are some signs that the rally might pause in the short term as traders take a breath. But it will be hard to get in the way of the stampede into US stocks that we've seen since Trump's election win. The latest Bank of America survey of fund managers found a huge surge in the number of managers who are bullish about market sentiment. Nearly a quarter of respondents expect stronger global growth, and the number of managers who are overweight US stocks tripled and is at an 11-year high. This is a survey of only one part of the market, but you tend to find trends followed by fund managers trickle quickly down the pipeline. So the move into US stocks has been turbocharged since Trump won the election. There is a lot of optimism about Trump before he has even taken office. We have to wait for January for that. On the plus side, the market is pricing in tax cuts and also the expectation that Trump could end the Russia and Ukraine war. Now, this is far from certain. However, an end to the war would be good news for Europe, and it could make the world safer. On the downside, the market seems to ignore the inflationary impact of lower taxes and tariffs, and any retaliatory action that US companies could face if Trump goes hard on tariffs and his America First agenda. Right now, there's a lot of optimism priced into the market. That can be seen with the rise of Bitcoin. It rose to near 90,000 as Trump is considered very bullish on crypto. However, he's not spoken about any of his pro-crypto policies, and Bitcoin could be very volatile from here. Looking ahead to this week, we could see a bit more volatility in financial markets. The VIX index has fallen sharply since Trump's win, so we could see that tick higher if some of the optimism around his presidency is priced out. But we expect this to be short-lived, and we continue to think that US stocks will outperform European stocks for the rest of this year. We also think that Trump's election win will trigger a structural shift higher in the dollar. The pound US dollar is the weakest performer in the G10 FX space this week, and it dipped below 128 at one point. The dollar is surging across the board. However, the pound could be vulnerable because the economy is starting to look weak. We get Q3 GDP for the UK later this week, which is expected to show a sharp slowdown in the GDP growth rate for Q3. Added to this, the unemployment rate spiked. While the market is still only pricing in the prospect of a December rate cut from the BOE at 18%, we think a weaker than expected GDP reading later this week, alongside the rising unemployment rate, could weigh further on sterling, and pound dollar could be at risk of a move lower to 125 in the medium term. That's it for now. Thank you for joining.